Rohr here with an early concise highlight on Friday, April 10th, 2015. It's currently 7:35 a.m. U.S. Central Time, coming to you a bit later than usual because we wanted to see the last data of the week out of the U.S. and Canada. We'll get back to that momentarily. And for right now, it appears that the central bank accommodation is helping equities rally in spite of weak data. So the data on balance remains quite weak. And what does all this mean to the markets? Well, yesterday, after stalling for considerable time across the last couple of weeks, actually going back to the rally going back to last week Monday up into the 2075 to 78 area, and with a bit of a tolerance to last Monday's high up at 2081 and a half, we finally did see the S&P push above 2082 or so, and that puts it back up around the old high from back in December, up at 2088.70. As a matter of fact, it's up 3 this morning at about 2089, traded to a high of 2090. This is very important because even above 2078 to 75, this market had a down break as well from after its push up to retest its previous all-time high up around 2107, which is your next higher resistance, the significant resistance. If the market should get back above, pardon me, the only down break on the charts right now, which is the down break going back to the 24th of March, back at 2090. This is why we have characterized this as the 2088 to 90 area resistance. If it gets through, yes, there's some nominal congestion around 2100, but after this long back below it, we would thoroughly expect a retest of 2107 or even the all-time lead contract futures high up at 2117.30. On the way back down, support should be back down, of course, into 75 to 78 initially, and then you have a bit of a recent interim level at 67 on the way back to 60 to 58 and the lower levels. And what's most interesting about this is that in spite of yesterday's push-up, because it was only a nominal further push-up, the 30-minute and 60-minute MACDs are only up near their upper runaway bands again. If we should see this push out above that, which is thoroughly consistent with whether it can get above 2090 again, that would mean it could also feed on itself once again on the upside. And if it can't get out, then that may be it in spite of the push above 2075 to 78, and we may find the market starting to come back down to test lower supports once again. And that's pretty much it for the short-term view of the S&P 500.